All right, starting off again with the book. There it is. Again, the link's going to be in the comments or the details of the video. But really quick, pointing this back out again, the fully qualified or fully paid lending program, right? One of the reasons why I kind of harp on getting a loan is because it takes a long time to save up the $25,000 you need. Like right here, you must have at least $25,000 in your brokerage account if you wish to enroll. So you have to have money in your account before you can actually loan things out to the bank, right? So by taking out that loan, it kind of fast tracks you to being able to participate in these additional programs that can generate you a substantial amount of additional money beyond your dividends that you get. It's really easy to sign up. Once you have an account open, you can go in there and request it, and then they will know that you want to do it and start loaning your stuff out. You don't get to pick what gets loaned out. It just automatically makes everything available in your account to be loaned out. So if U.S. Bank or one of the other institutions want to borrow your items, they can see it on a sheet and just choose from it. And somewhat throughout the day, you might get a notification or see in your activities that some of your shares have been loaned out. And then when you're looking at your positions, it'll also show you with an L next to the ticker symbol that your items have been loaned out. Now, you can recall them at any time and sell them if you want to, but with them loaned out, and the benefit behind this for the institutions is that they're able to have access to retail investors like you and me that don't get in and out of positions so quickly. So that way they're able to hold on to those items longer. And then it's a benefit to you because you're getting additional money paid to you for just owning stuff, which is fantastic. So after looking at this, one of the other things, so if I get questions asked, hey, what can I expect to get from lending my items out, or what can I expect to get from dividends from the high yield ETFs? And I actually have that pulled up. So on my little journey, back in 2023, I started really trying to dive into higher paying dividend stocks, and I found Zim. Zim is great, but they don't pay out that often. So they would have like a $6 dividend or an $8, something that was insanely high. And it worked out well for a couple of months. And then when things slowed down, then it was a problem. So I went some time before finding, I was trying to do options, buying and selling option contracts, which worked out pretty good for a while, but you don't see that on your like dividend chart. Well, you can tell when I started dabbling into YieldMax. That was the first funds that I found were YieldMax, and they had incredibly high payouts. And if you have dividend reinvestment turned on, you get even more shares. Then the next month you get even a higher payout. So for like the top month of payouts, it was in December, and yeah, that's correct. I was shocked too. So it works so well as far as compounding. Getting more shares the next month, you get even more. And then the next month, even more. There was, however, this was an election year. So in the next couple of months, the dividend payouts went down because there was a big drop in the market. Things started paying out less. And YieldMax was struggling a little bit because they were getting hit with their puts, or they had to buy the contracts back at a lot higher price. And I know some of this doesn't make sense right now, but if you ever have traded options, if you hold it and it moves a certain direction, a couple of dollar change in the actual underlying can cause it to wildly get either expensive, or you just watch the value just to vanish, because you're looking at the price of your option contracts being rolled up with a time value. So there's an intrinsic value and a time value, and they move very, very fast, which is why it's kind of difficult to trade options. But if you know what you're doing and you've been doing it for a while, you can actually make a pretty good amount on them. But you do have to have some capital in your account to be able to play around with options. And I think A lot of times you see a lot of recommendations for people to only use about 10% or 5% or something small for doing what's called option contracts or speculation with your account, because you can blow your account pretty fast. It can go to zero pretty quick. I learned that lesson too back during COVID. So you could have a lot of contracts that are 6 months out that have value in them, and then they can go from $5,000-$6,000 to zero within an hour, depending on how fast the stock price drops. But I've been pretty happy with what I've seen from YieldMax. I then started looking into other funds too. So there's a few companies. There's Roundhill, Defiance, and YieldMax are like kind of the top ones. You've got Granite Shares, ETFs, which is another one, and then Curve. They all do different. They have the same concept, but they have a little bit different strategy for each of them, and it just depends on which strategy you would want or which strategy you like best. For me, I like trying to go after all of them, so that way I can see the benefit of all of them, because they all interact differently when the market responds or goes up or down. They all have different reactions, so that's something to keep in mind. But yeah, so what is it? At the time of making this, the current dividend yield for what I have in the portfolio is 57K, and it's continued to go up, which means that potentially next month it'll be even higher, and I'll do a follow-up video to show what's happening with next month's dividends. But the other thing to keep in mind when you're doing dividend investment and you're trying to live off of it is you don't get all of your dividends all at once. Each of the funds have different payouts. Some of them pay out at the beginning of the month, some of them pay out at the end of the month, some of them pay out weekly. It just depends on which one you get. So I pull up the YieldMax site here so you can see they actually have their scheduled distributions and announcements. So if it's typically every Wednesday, so every Wednesday they're going to have a declaration. If you go down to the contact us at the bottom, you can actually go to contact us and then type a message to them asking to be added to the newsletter. And what happens is at like 3 or 4 in the morning, 5 a.m., depending on your time zone, you'll get an email with the notice of what the distributions are going to be for that week. So how they do it is they used to have everything pay out just twice a month or 2 times throughout the month. And then they split it up into groups. And these groups are pretty phenomenal because now you're essentially getting a payment each week, depending on what you hold. And if you want to see what's made up of each of the groups, if you go to the bottom, it'll have the group listings. So you can see which ones pay weekly, which ones are in Group A, Group B, Group C, Group D. So when you're building out your dividend portfolio that you want to do, if you essentially get something from each group, you can go look and see what the return rates are and have a good idea of what you're going to make each week. It's really helpful because then you can build out what buckets you want to have that's going to pay you each week. And then also you can mix in the weeklies in there to give you a little bit more every single week. So like if you held GUI, right, it's going to be in Group A. Group A is going to pay out the first week of the month or second week of the month. You have to go look at the schedule. But essentially this is going to be 1 week, 2 weeks, 3 weeks, 4 weeks. And if you have a month that's got 5 weeks in it, it'll rotate back to Group A again. The cool part about this is if you have compounding, especially if you have the weeklies, you'll see a significant jump in what you're going to get paid. Now, YMAG, you can go to each one of these and actually look and see what the holdings are. And YMAX has about 4% of every single one of the funds in it. So it's like a fund of funds. It's a more diversified right off the bat fund you can get, and it pays anywhere between 13 and I've seen the highest be 26 cents, I think, each week. It varies based off of what the payouts are for each of these groups. So week 1, it's going to get the payouts from everything that it owns that's in Group A, and then week 2 it rolls into Group B. So it's pretty slick the way they have it set up. You also have your other funds that work off the indexes, but you can you can go in there and see the holdings and have an understanding of what you're looking at. But if you do your research, you can see what the dividend payouts are for these. Now, keep in mind, they're going to vary wildly because it depends on the success of the contracts that they sold. And I will go into that in another time. But here, again, is the review of the payouts. Now, how these work is the announcement's on Wednesday. You have all day Wednesday to buy shares of that fund. Thursday is ex-div date, meaning that they take the payout that they're going to pay you in a dividend out of the stock price, and then on Friday you receive that payment. It's right there. It's a really short flash to bang there on declaration, ex-div, and payment date, which is fantastic because it's a really fast payout. And they've got different setup of funds in there. I highly recommend you go check them out. You can do some due diligence and get yourself educated on how they work. But they've been working phenomenal, and I think each of these funds have like a fund size of almost $1 billion per fund that's in there because they're pretty popular, or I should say they're gaining popularity. I hope this helps you get started in your little exploration. Till the next time, see ya.